Par value is a fundamental term in the world of bonds and stocks. Let's break down what it actually means for your portfolio. At its simplest, par value is the face value of a security as stated by the issuing company. When you buy a bond, $1,000 is the standard amount the issuer promises to pay you back at maturity. Par value helps determine how much interest you earn and establishes the baseline amount returned when the investment matures. It is important to distinguish between fixed par value and the fluctuating market price you see on your brokerage app. Bonds often trade at a discount or premium to par based on how their interest rates compare to current market yields. Remember that par value is just a reference point. The actual price you pay depends on current economic conditions and demand. Thanks for watching. Understanding these basics helps you make more informed decisions. Please consult a professional for your specific financial needs.